Shopify reported second quarter earnings results that I'm going to review in this video. I'm also going to update my recommendation on Shopify stock. Coming into these earnings results, I had Shopify stock rated as a hold. I did not have it rated as a buy. And so you're going to want to tune in to see if I'm updating that recommendation up or down. Let's get right into it. Total revenue for Shopify increased by 31% to 1.7 billion. However, the loss per share worsened to $1.02 compared to 95 cents in the same quarter the prior year. Shopify did record a $1.3 billion impairment on the sale of its logistics business. Speaking of the logistics business, this is why I initially soured on Shopify stock, I would say a little over a year ago, when it started making significant investments into logistics, shipping and handling, fulfillment, all of that. I'm not a fan of that industry, having seen how skinny and non-existent the profit margins can be in that industry, as evidenced by some of the other companies that I follow in the space, including one of the best, which is Amazon. And so I wasn't excited when Shopify decided to spend billions of dollars to get into the logistics business. Ever since it made that decision a little over a year ago, I downgraded the stock. I did not want this stock recommended as a buy. And so when it's made the decision to sell this business, I was happy that it made that decision, in that it made me more interested in Shopify stock. Although the way the sale worked, I wasn't thrilled about it, meaning that when Shopify sold the business, it didn't sell it for cash, it sold it for an equity stake of the business that it sold it to. So Shopify is still invested in fulfillment and logistics. It just moved the business over to someone else, and then Shopify owns a piece of that business where it moved the logistics business to, if that makes sense, right? So it didn't get cash, instead, it got an ownership stake of the business that it sold it to. So the results of that fulfillment business is still going to come back to Shopify in just a different way. Instead of it being reflected in its revenue and expenses, it's going to be affected on the balance sheet in the form of changes in the value of its equity investment of that company. So I'm glad they transitioned away from the business, but I wish they would have just sold it outright for cash. However, there is a strategic relationship between the business that it sold it to, where Shopify's merchants can still benefit from the services. So I'm open to seeing how that relationship pans out. And I will say I stand corrected if it ends up working out in Shopify's favor. Shopify's gross profit margin decreased to 49.3% from 50.7% year over year, a marginal decrease. I suspect a bigger increase in its gross profit margin as it fully transitions away from this logistic business. I suspect its gross profit margins will increase because, like I mentioned, the logistic business was not very profitable. The gross merchandise value increased by 17% to 55 billion, and this is a major key for Shopify's business. This is the real core of the value of investing in Shopify, is how many merchants are on the platform, how many transactions are happening on the platform, and how much money is being spent on websites and platforms that are using Shopify, right? Because that will allow it to generate revenue off those transactions. It will eventually allow Shopify to get into perhaps the advertising business, as many other e-commerce businesses are getting into. That's a lucrative source of revenue I would like Shopify to branch into more. So I'd like to see this growth in GMV. That's really good news for Shopify stock investors. Cash flow from operations also improved to 118 million. That was up from a loss of 75 million in the same quarter the prior year, although this was primarily due to changing working capital assets and not so much from profitability increases, which I would have preferred. Management is forecasting revenue growth of at least 20% in the third quarter and gross profit margin improvement to between 51 and 52%. So nice progress expected in the third quarter. So, to my recommendation of Shopify stock, I am keeping it rated as a hold. I don't think the company made very much progress in this quarter for me to upgrade the recommendation. I think this was a quarter that needed for the company to process this transition away from the logistics business, and it will take some time for it to fully realize the benefits of the transition away from the previous model. So progress was made by Shopify, but not enough for me to upgrade the stock. But overall, solid revenue growth from Shopify in the quarter, although I would have liked to have seen more in terms of gross profit margin improvement as a result of revenue improvement. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.